Hi, this is James Shope with Westpac London's end of day report for Wednesday, the 27th of March. It's a down day for equities here in Europe. In fact, the US has been dragged lower as well. Italian political uncertainty is certainly one factor at play, with no government yet being formed, and also an Italian bond auction seeing weaker demand. The Cypriot bailout reverberations continue. No real fresh news there, but nevertheless, that seems to be continuing to undermine investor confidence in European policy making. We had some European economic data. The Business Climate Index slipped for the first month since September last year. This is a March reading. The Economic Confidence Index was down again, down also for the first month in 5. Just like in 2011 and 2012, these indices did pretty well at the start of the year and then fell away sharply to new cycle lows subsequently in those years. In 2011, it was because of, what was it? That's right, the impending recession in Europe, Greek referendum and exit from euro speculation, and also the interbank lending freeze. And then last year, it was the deepening recession, the LTRO optimism fading, and Spanish and Italian bond yields spiking that saw the mid-year deterioration in those confidence indicators. So it remains to be seen whether in 2013, Cyprus bailout, Italian politics, Greek bailout delays yet again, and potentially Spanish and French risks, which we think might crystallise. Remains to be seen whether those factors push the confidence indicators to even new lows later this year. On the data front, unrevised UK GDP at -0.3%. Canadian CPI jumped sharply because of higher clothing prices after 3 months of falls, and also higher petrol prices. We had some Fed commentary in the US with various officials saying that they'd favour perhaps altering the pace of asset purchases depending on the incoming economic data. Oh, and pending home sales fell 0.4% in February. What's happening there basically is that lack of supply of decent homes for sale seems to be constraining sales. Even so, the February number was still the second highest for sales of established dwellings, pending sales, that is ones that have been signed but not finalised. Second highest of the upswing over the last couple of years. So that's the news today, but in the UK we had ICAP, one of the brokers, lower their profit expectations, and that's seen the market weaker. The Bank of England's put out some numbers on the required capital building that some of the banks, unspecified who, need to do. So given all of that, we've got the London market down 0.2%, French market's down 1%, the Germans and the Spaniards are down 1% as well, and Italian market off 0.6% today, and the Dow's down just over 0.25% at the moment. It's around 5 o'clock in London. 14,519 is the level of the Dow. Commodity markets. We've got oil prices down 0.3%, $96.06 a barrel. Copper is unchanged, and the gold price is up 0.5%, $1,605 an ounce. The Aussie dollar at 1.043 has been drifting down, with equity market sentiment more negative. Risk off is the name of the game today, and that seems to be hitting the Aussie dollar. Okay, that's all for today. Back in with the final report for this week. It's Easter. I'd like to say thank you to the ABC listener who very kindly gave me a laser pointer, which I won't point at the camera because it might do some damage to your eyes and to the camera. Speaking of eyes, I do need to put the glasses back on, and I'll see you tomorrow.